It's a big amount of money. It's a large amount of money in your trading account. Have you noticed a difference in how you feel going into positions, exiting positions, risk management approaches? Is anything altered?
Yeah, so I'm taking 2 weeks off and I'm not trading that account. So I haven't opened a single trade. I'm just waiting.
What is it that you have that is going to give you an edge over them? Now, that's hard to develop and it takes time to understand. But that's why I want to challenge you. Instead of just going, yes, I'm going to trade, I'm going to learn to trade, here's my money, let's click a load of buttons, do some research. You've got to be at the top of your game to keep it.
So I think I'm going to sell the flag. I'm going to take that money and put it in a margin call, and then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like that money was going to turn into a new motorcycle. Well, guess what? That motorcycle didn't come that year. Okay.
When the downtown lights start to come out at night,
It's a big amount of money. It's a large amount of money in your trading account. Have you noticed a difference in how you feel going into positions?
Who is ready?
Exiting positions, risk management
get
approaches.
started.
Is anything altered?
Ladies and gentlemen,
Yeah, so
Welcome
I'm taking 2 weeks off and I'm not
to
trading that account.
TradeDelicious
So
Live.
I
I hope
haven't
you're having a
opened
fantastic
a single
day.
trade.
Let's
I'm
go
just
ahead.
waiting.
and get rid of that. Oh, we've got two footers. Hang on a second. That's not supposed to be happening. There we go. Good morning, good evening, good afternoon, everyone, wherever you are from. I hope you're having a fantastic day. Welcome to TradeDelicious Live. My name is Jordon Mellor, and I'm going to be host for today as we dive into a bit of morning coffee, and then we're going to be joined, as usual, on a Tuesday by Aaron Collier in about 30 minutes. I have to say, I'm feeling a little bit under the weather today, so energy levels may not be as high as what you used to. So keep that in mind. But if you guys are here, if you want to help me get through this live stream while my bones are on fire, feel free to say hello. Let me know you can see me. Let me know that you can hear me. For those of you who are already hitting that like button, you are incredible. Thank you very much. For those of you that haven't, I hope you'll be able to hit that like button by the end of this live stream, some way, form, or another of doing so. Bit of a crazy day out there in the fundamental space this week. It's been very interesting to see some of the mishaps that have been happening, and I'm going to explain a little bit what I mean by that, by the mishaps, in just a little bit. Looking across the board, it's looking like we may have a US dollar strong type of day. Now, the reason I'm saying that is because my whole watch list is negative right now. Most of them are paired against the US dollar, evidently. So let's just do a real quick check-in. I know you guys are here. Joy, Russell, Zan, welcome, welcome, welcome. Yeah, US dollar pretty strong. Japanese yen by far the strongest today. Very interesting to see that. Timmy, good morning to you. I hope you're having a fantastic day. Guys, in case you missed it, in case you didn't see the YouTube shorts which we uploaded or the YouTube post that we did, we've launched social media accounts now, okay? So we've got TikTok, we've got Twitter, we've got Instagram. TradeDelicious is branched out into the social media world. To celebrate that, on Twitter, at TradeDMedia, on Twitter, we are giving away two 100k boot camps from two 100k bootcamp evaluation accounts from the Fivers. So if you want to get your hands on one, maybe two, if you're lucky enough to somehow win both. If you want to get your hands on a free 100k bootcamp evaluation account, head over to our Twitter. That's at TradeDMedia, and you'll see our pinned tweet. We'll give you instructions on how to enter that and how to be a part of it. So it's a bit of a celebration that we're doing, given that we've now launched on our social platforms. It's really exciting. It's good to see so many new people coming through and experiencing TradeDelicious for the first time. Really, really excited with what's to come. Couple of other announcements as well. We've got a webinar coming up next week, I believe next Thursday, June 1st. I want to say June 1st. Okay, don't quote me on it, but for now, just put it in the back of your mind. June 1st, I'm going to be doing a webinar all about what a trading edge is. We spoke about this yesterday. That's going to be coming to fruition. Okay, June 1st, I'm going to be talking about what a trading edge is and how to identify it. That's going to be a webinar right here on TradeDelicious. So make sure you're subscribed, make sure that notification bell's on, and make sure you are ready to receive the notifications across all of our social accounts, as we're going to teach you I'm going to teach you a little bit about what a trading edge is and how to really utilize one. All right, pretty simple. All right, no, not pretty simple. One more. I forgot about this. I don't know how I forgot about it, but I did. TradeDelicious morning coffee right now. Okay, we got the coffee right here. Morning coffee. Then we're going to transition with Aaron, and we're going to have a chat to Aaron about a couple of different things. After we've spoken to Aaron, where are we going? We're going back over to a new episode of Traders of Money. That's right, Traders of Money. We've got a new episode of the podcast coming out. This is the one you've all been waiting for. 78-year-old day trader. Okay, David Brewer has sat down with me, gave me the whole story of his life. I even chucked in a couple photos from his upbringing as well in there. What a fantastic guy to sit down with, to get an understanding on why he's doing what he's doing and how he's going about it. Is really, really a moving and inspiring piece. So if you guys want to get inspired, you want to get motivated, if you're struggling as a day trader, David is 78 years young and still going, teaching himself to trade to fund a charity. If that's not inspiring, I don't know what is. I don't know what's going to get you going, okay? But stick around for that. That's going to be on right after Aaron's Learning Hub episode to talk us through whatever Aaron wants to run us through. That's going to be really exciting as well. Okay, announcements done. How are we feeling? Go on, very quiet in the chat today, okay? I can only see one message right here. Let's get this spam. Everyone's spam in chat right now. I want to get this flowing, all right? I want to see some energy. I'm going to need it. I'm feeling a bit under the weather, all right? My body's really slowing down on me. It's 7 p.m. here. I'm going to hit a wall. I need you guys to deliver some energy for me. I need you guys to pick me up. So make sure we get this chat going. Let's get a poll going. Let's hit that like button. Let's really start flowing with ideas, with questions, with thoughts. Send them in, right? This is your opportunity. This is what morning coffee is all about. There's something I really wanted to discuss because I saw it on Twitter. Right? I'm not usually on Twitter that much, personally. I'm not a big Twitter person. However, I did see this. AI generated... This is all supposedly. I want everyone to be aware. This is supposedly, but I saw different moves. Okay, AI generated images of the Pentagon, an explosion at the Pentagon, and there was a few media sources which went out and posted these images to the point it moved the S&P 500. Kid you not, it moved the S&P 500. People generally thought this was real. The AI generated images of an explosion. It moved the S&P 500. If that's not alarming when it comes down to market manipulation and what AI is capable of, I don't know what is. That is impressive, right? That is really, really impressive. Hi there. Come on, guys. Thank you, Charlotte. Calabo, good morning, traders all the way from South Africa, Cabalo. Cabalo, is that right? Good to hear. Good to hear. I couldn't find the story after I heard. Yeah, Joy, it's nuts. It's absolutely nuts. But yeah, isn't that scary to think about where this AI picture generation can take us? When I say generation, I don't mean like Gen Y, Gen X. I mean generation as in generating the image. To fool that many people to the point people were buying and selling. I mean, you're probably going to see a lot of people now create images, create media companies, and flood that fake information across just to try and hit a ripple to be able to profit off that. I mean, it's going to be all the crypto pump and dump schemes all over again, only it's just going to be through fraudulent. I mean, how long till these people get arrested? But very interesting to see that moved the market. I thought that was pretty impressive. If I say so myself, that was pretty impressive. Talking of the markets, what's everyone been looking at today? I haven't traded today. I've been very busy, a very busy man today, getting everything ready for you guys, getting all the content ready for you guys, getting Traders Day live ready for you guys. Good morning, Stanley. Good to see you. Cabello, you almost had it right. I almost had it right. Oh, Cabello? Cabello. Is it Cabello or Cabello? Or am I completely off? You're going to have to spell it out. Looking at Aussie dollar, Japanese yen's a fun one today. Okay, just for you guys that missed it, maybe you just tuned in. Japanese yen, the strongest asset today. Okay, looking across the FX pairs, looking across the majors. Japanese yen by far the strongest. Money's going in Japanese yen, followed closely by the US dollar. Right? The US dollar is looking reasonably strong as well. Looks like a few people want to go risk on when it comes to the US dollar. Excuse me. Oh, let's get that out of there. Aussie dollar, Japanese yen tapped up early morning into the 2-day previous high. Got up into that high, absolutely stumped down from there. I'm really intrigued to see how US dollar, Japanese yen's going. Very similar setup. Aussie dollar, US dollar, however, didn't get anywhere near up there. We've just broke yesterday's low of the day with volatility too. Very interesting. You shorted Aussie dollar, Japanese yen, 60 pips. Good on you, Zan. David, the man of the moment. David, it's good to see you. David, if you can hear me, straight after this live stream, your episode of Traders of Money is going to be going live. So guys, the wonderful 78 years young day trader, which I've been telling you guys about, is David Brewer. David, your episode is going to be going live in about 30 minutes. I'm going to say about 30 minutes. You're going to be able to watch that. So keep an eye on that, guys. Car, bear, low. See, I'm going to say that in an Australian accent. So you need to stick with me here. Car, bear, low. Right? That's what I'm going with. That's how it's pronounced. Looking at New Zealand dollar, US dollar. Why are you looking at New Zealand dollar, US dollar today? Obviously, US dollar's pumping a bit of strength. Oh, look at that rejection. Look at that pre-drawing rejection from days ago. Oof. Excuse me. Very interesting. Very interesting. This is what you're looking at. I mean, yesterday it didn't print anything. You guys remember yesterday morning we spoke about New Zealand dollar, US dollar? Alma, good day to you, good sir. Welcome to TradeDelicious Live. I hope you're having a fantastic day. You guys remember yesterday we talked about New Zealand dollar, US dollar. What did I say? We were going to close within that day, right? I told you we were going to close within that day. You can see that. You can see that. Now, when I say I told you so, right, don't take me seriously, okay? There's no way I would have actually known that was going to happen. Don't take me as someone that's delusional. No, probability-wise, it was going to happen. It was very easy to see the way that day was unfolding. You can see real sideways. Today, however, broke yesterday's high, broke yesterday's low. That's interesting. That's really interesting. What will the debt ceiling decision do with the DXY? I'm confused on the US dollar strength given the debt ceiling talks. Yeah, well, this is what we need to ask ourselves, right? Because this whole debt ceiling that they're talking about, I mean, we've been going back and forth on this debt ceiling and they're delaying it as much as they possibly can. All right. They've been delaying it as much as they possibly can. The reality of the situation, how's the US dollar going to react? Now, unless they default on these loans, I can see US dollar strength being a thing. If I'm completely honest, it depends on how they handle it. It depends on how they handle coming out of it. I'm going to actually save this conversation for when Aaron arrives, because Aaron's going to know a little bit more about it than I am. And I think he's going to be the better person to ask. But I can see this maybe hurting. Yeah, let's pick up that conversation when Aaron arrives, okay? Let's see if he can explain a bit about for us, because I think that's going to be a better thing to do. I think it's going to be a much clearer way to go about it. Yeah, looking into these, I mean, New Zealand dollar, what are you trading? What are you looking for at the moment? Cabello? Where are you taking it? I'm really interested to know where you may be taking this and why. Well, my headphones have just gone absolutely crazy on me. Bear with me, guys. Yeah, so if you're just joining us, over on our Twitter account, all right, that's at TradeD Media. We are giving away 2 100k bootcamp accounts, courtesy of the Fivers. 2 100k bootcamp accounts. We're going to give them away on June 2nd. So if you guys want to get your hands on a free bootcamp account, head over to our Twitter account and have a listen, or have a read, should I say, on what needs to be done in order to get that. You got that right with the news release between US dollar today and New Zealand dollar tomorrow. I'm seeing that long position. Yeah, so Cabela, you're assuming, correct me if I'm wrong, you are assuming that we're going to have US dollar weakness coming off this debt ceiling decision. All right, correct me if I'm wrong there, but that's your assumption. That's what you're willing to trade on. Let's say you're right. Let's say you're right, and we do get that. Or maybe you're not talking about the debt ceiling. Maybe you're talking about the flash services PMI or the monetary policy tomorrow, right? We're looking for a 25 basis point hike for New Zealand tomorrow. Maybe that's part of your analysis too. I'm going to actually clear that up with you just before we begin. Are you looking at the PMI and the RBNZ interest rate decision, or are you looking at the debt ceiling? Nikita, good morning. I hope you're having a great day. Cabello, if you are like Jordan, what on earth are you on about with this debt ceiling? Might be worth noting. S&P 500 will drop today? That's a question, Grim. That is a big, big question, good sir. I think if I knew the answer to that question, I would be loading everything I had into a trade to back it. Look, we don't know. We don't know how investors are going to react. We don't know how these guys are going to handle this debt ceiling. We don't know the manufacturing PMI data that's going to come through. No idea. No idea, Grim. Now, over long term, we can look at probability. I do think it's a little overextended. I fail to see how we can keep climbing higher given current economic conditions, but maybe I'm wrong. It's been ranging for days and just bounced off the support zone looking into the PMI and the interest rate. So you're expecting positive news. No, you're expecting negative news from the manufacturing PMI and positive news for the New Zealand, the RBNZ official bank rate. Okay, well, the RBNZ official bank rate will already be priced in. Okay, so if that does come in at 25 basis points, you will likely see a sell-off in New Zealand dollar. The reason I'm saying that and the reason I'm telling you that right now is because with interest rate decisions, they're usually priced in way, way, way before. All of this bullish move right here would have been most of the people pricing in that RBNZ move. So be very, very cautious of that. Remember, with interest rate decisions, especially if there's a surprise, great opportunity to see a big whipsaw move, sit back for a little bit, trade with the direction over the next couple of days. All right, it tends to work pretty well. We've spoken about this over weeks and weeks and weeks. I'm yet to back test it, but I mean, I keep seeing it. Because of the news today, I don't know how to interpret them. No one knows how to interpret them, Grim. We can set plans, but the reality is, how's the market going to react? And have the big players already positioned, or do they already know what's going to be happening with this debt ceiling? These are the questions you got to ask, because the big money, how they react is going to be very interesting. The decision, first of all, the decision that they made, the decision that, excuse me, the decision that they made is one thing. How investors react is another, and that both of those are unknown variables. Positive, I think stock market will go up for the PMI. I'm long. Okay. Fair enough. I don't like preempting the news that much unless I've got something to back it. PMI is usually the data I would use to back other things. You know, I'd use the PMI, excuse me, to be able to predict retail sales or potentially unemployment rates, which that's where I'd usually sit there. So it'll be interesting to see how the S&P reacts to this manufacturing PMI. Guys, if you are going to be looking at trading the manufacturing PMI, you've got about 5 hours until that's released-ish. Yeah, no, almost a little bit less, 4.5 hours till the manufacturing PMI comes out. We're expecting to come in at 50, which is dead even flat, right? Not good, not bad. We're at 50. We're coming from 50.2, so we are expecting a minor slow when it comes to manufacturing. Services, same thing. We're coming from 53.6, expected to come in at 52.6, so we're expecting a slow in economic conditions, both in manufacturing and in services. I'm waiting to trade after the news, Joy. I think that is a brilliant decision. I cannot stress that enough. I love that. You've got 5 hours, right? So if you're a short-term trader, you've got plenty of time and opportunity to maybe find something out there. But coming up to then, I think that's a smart decision. Great British Pound's being pumped right the way down. Now, we obviously had some news. We had the manufacturing PMI and the services PMI. Both missed their estimates. With both of these, we were expecting, actually, sorry, with manufacturing PMI, we come in at 47.8 last time out. We're expected to come in at 47.9. So we're expecting minor growth, still market contraction, but better than what we were already at with 47.9. We come in at 46.9, which is not good news for the pound, which is why you're seeing this happen right now. Not good news for the Great British Pound. And then on top of that, we had the services PMI. We're at 55.9. We're expected to slow down into 55.5. We slowed right the way down into 55.1. So once again, missed estimates in a negative foothold there as well. While services are still high, we're at 55. That's a decent number. Manufacturing's down at 46.9. We're expecting to actually improve closer to the 48. So it's interesting to see how that's playing out. Great British Pound's managed to just tap below these lows. We haven't been trading down to these prices since late April. 20th of April all the way to the 23rd of April was the last time we were trading around these prices, which is interesting to watch. Aussie dollar, US dollar, how are we tracking? Been stuck in this kind of wedge for so long in Aussie dollar. You guys know I've been shorting this. I've been shorting this since December last year, probably even earlier actually. I think I was in earlier around in November last year. I've been shorting this, and we're just sitting in the exact same range which we kind of got here. You can see we went sideways for a little bit, this little weird wedge. Getting the same thing here. I thought we were finally going to break out of it when we hit here. I thought that was us breaking that wedge there, only for us to get back in, retest those same positions, come back in, retest these same positions. So it's very interesting to see the unpredictable nature in which the Aussie dollar is moving of recent. Maybe it's more of the risk-off feel that people are getting across the board because it's a little bit messy. It is a little bit messy out there, especially economically. It's a great time, in my personal opinion, it's a great time to be learning about fundamentals in FX. There is no better time to see a greater impact in fundamentals in FX than what we have right now. Like, you could not get a clearer picture on what moves what. It literally will happen as we go. And I think that's powerful in itself. It's the best time to be learning fundamentals. If you do want to learn a bit about fundamentals, guess what? Learning Hub, TradeDelicious, right here on YouTube. Learn with Aaron. We've got PPI, NFP, CPI. We'll run through pretty much everything. He's going to be joining us again today. And I can tell you, give me a second. Home sales and core durable goods. Okay, so it's going to be discussing home sales today, I think. How's your trading going? It's not, Alma. Excuse me, if I'm honest. Over the past week, I think I've had one position. Over the past month, I've maybe had three. In terms of opportunity, I haven't found anything that really grabs me. And then there's also the time aspect, right? So I've been busy on so many other projects in building TradeDelicious for you guys and putting everything in to build what we can actually achieve here. So my trading's taking a little punch for a little while, which I'm okay with. It's fine. I'm still keeping a track on the markets. I'm still understanding what's going on, and I'm still trading here and there, but I'm definitely not as focused as what I was a couple of months ago, because I'm trying to build TradeDelicious into something that can sustain itself in that aspect where I can go back to trading. All right, so I can go back to these live streams, which are much better. So that's why we've got people like Aaron, and we're going to have lots and lots of more people coming in, lots of new friendly faces, and lots of content to help you guys progress. So I can take a little step back and get back into the trading. But Alma, to be completely honest with you, and that's what it's all about honesty. My trading hasn't been very prominent of recent. You're probably itching to trade more. I've also seen the market seems a bit less volatile in the past few weeks. It's a weird sensation because I wouldn't say I'm itching to trade more. I'm patient. I'm happy with the returns, and even when I'm trading, 2 to 3 positions a month, sometimes I'm even outperforming what I had if I was trading the whole month. So I'm a give or take. I'm really, really enjoying building TradeDelicious. It's good fun, and I think what we are able to achieve here is very exciting. you know, what we're able to build for you guys, what we're able to do with you guys, the live events, the different contests, the people that I'm meeting, the network, everything. It's really exciting. So yeah. Have you noticed ASX 200 is not giving away in many points these days? Yeah, very risk-off markets, Robbie. Very risk-off. People are very nervous about what's going on in the outside of the financial markets, and that seems to be happening. What's your take on the NASDAQ? Same thing as the S&P 500. Don't touch it until the PMIs come out or until we have a decision on the debt ceiling. Oh, so less is more? Pretty much. Less is more sometimes, as they say, but yeah, thanks for all the content. No, Elmer, I appreciate that. I hope you guys are enjoying it, because I do. We're doing a lot of it, and we really want to keep pushing it. That's right, guys. If you've just seen in the chat, join us for the Trading Festival of the Year. Okay, I'm going to be attending, and I'm going to be talking about Edge. The last thing that's been dropped in there, if you didn't see it, is beer. Right, there's beer. It's a festival. It's not a conference. It's a festival. All right. So make sure you guys get in. If you're around London, June 17. If you're not around London, get to London. You still get your tickets. Jordon 30 for 30% off there. What should we do? What should we do? Is it normal? And is 5 to 7 points profit a day good on ASX? Can we survive on that? Well, Robbie, depending on how you survive is depending on your risk, depending on your edge, your risk, and I mean, there's a million different things that run into whether you can survive or not. If it's not moving and you feel that it's not actually benefiting you as a trader, then don't trade it. Don't try and force it. If you try and force it, then you'll be stuck. Right? If you try and force it, then you're definitely guaranteeing that you won't survive. If you know what you look for in an asset, you know what your plan needs, and you know what your trading strategy thrives in, wait for that market, trade that market. Patience is gorgeous. And this is why I tell so many people as well, not to go straight into full-time day trading. If you've got a day job or whatnot, keep it. Because that allows, you may think it's hurting you, but trust me, it is not hurting you. It is not hurting you. Keeping you away from the charts sometimes is a really, really good thing, and it's something a lot of people lack doing. So I highly recommend you keep doing that. Just highly recommend. All right, bear with me while I just look up here. Yeah, Aussie dollar's been a little bit crazy. Right, so will it come back to old times with the volume and volatility? Things change. Markets change all the time. Look, I think volatility will increase when we have a bit more clarity with what's going on in the housing market and everything for the ASX. But I just spilt water down me. Live on stream. How good? You guys didn't witness that, right? Just spilt water all the way down me. Let me get this doing that. There we go. Sorry, guys. Bear with me for just a second. Good advice. Thank you, Joy. I've seen when buying a ticket for Traders Day, you get an evaluation account, George. I believe so. I believe so. If you buy a certain ticket, you do get an evaluation account. So you get to meet everyone. You get to be a part of an amazing event, and you also get an account. Not to mention the amount of content and the amount of, I mean, just everything that we have going on that day. The people that you're going to see, the tournament that we have on, a huge tournament, right? Like there is a lot going on that day that won't just stick to sitting and getting an evaluation account and learning from people. Okay, this event is a festival and is something I really want to highlight. It's going to be a great event. It's going to be good fun, and I'm super excited. So what assets do you trade, my bro Jordon? And do you rely on trading? Do I rely on trading for a living? This part-time for me, but really important part of my life. Okay, if it's okay, so there's multiple things. What assets do I trade? They've not changed, Robbie. They've stayed the same since you joined us. I think it was 3 or 4 months ago. I've not changed, right? I'm still trading the same assets. CFDs, mostly US dollar, Japanese yen, or the Aus 200. Okay, the Aus 200 is not doing anything for me, so I'm not trading it. Do I rely on trading full-time? Rely is a key word. Rely is an interesting question. I wouldn't say I rely on it. No, I think I have safety nets. So if my trading doesn't perform, I can freely go about my business. I don't rely on it, but it would contribute to a large portion of my income. Okay, I think that's a better way to say that. Word of advice for the psychic needed to be allowed to maintain an account funded. I need advice when I hit that player. Well, the beauty in a boot camp account is you take time. You kind of build up to it, right? You start 25K, then you move to 50K, and then you move in. So the beauty is that aspect. Like, you can take your time and move into it. Sorry, I'm getting a little bit distracted here. I'm just pulling Aaron in. Here we go. I think we might be working. Aaron, are you there?
How you doing, my friend? How's it going?
I'm very, very well. How are you doing?
I'm fantastic, thank you. It's a beautiful, beautiful Tuesday. Really excited to get things going. Have you guys made any trades this morning? What's going on?
No, just doing some actually some more outside trading conversations, which is really interesting to have. We're talking a lot on psychology today. We're having to talk about a little bit of risk off. I know we've talked about it a few times as well in the past, but we've got PMI coming up. We've got the debt ceiling saga happening. We've got New Zealand dollars, the RBNZ interest rate decision tomorrow, and I think I'm getting sick. You know, just as you're starting to get sick and your bones start to ache and your skin gets a little rough, that's been hitting me this afternoon. So I am trying to power on through.
Good luck, sir. Good luck. Yeah, you're heading into your winter now, so I guess that makes sense, right? And there's so much going on in the markets that can add some additional stress. I can understand why you would be potentially sick. It's been crazy. Yeah, the debt ceiling saga has been it's been a really unfortunate situation, probably avoidable, but what are we gonna do, right? The politicians are going to politics.
Yeah, it's been just strange, hasn't it? It has just been strange because it's not just the US dollar. It's happening around the world, like all the finance, and it's a very interesting time. But what do we owe the pleasure with today, Aaron? What are we going to be having a chat about?
Yeah, so I want to talk to everyone about some additional ideas, some additional things that are playing a role in our current environment. Today, we actually have some data coming out from the US Census Bureau in so far as the new residential home sales. And I actually want to talk to you guys a little bit about that today. I've seen a lot of people start to compare what we're seeing now to what we saw in 2007, 2008. And I believe this is a really good place to start to show why this might be a different situation. Still recessionary, but maybe not as aggressive, maybe not as crazy. And there's definitely a lot of things that we can take away from these opportunities. It's not like the 2008, if you guys are familiar with someone like Michael Burry, who made $1 billion shorting the housing market. It's probably not going to look something like that. So I wanted to talk to you guys about that and show you a little bit about why.
So many people follow Michael Burry like religiously, right? Like he hit the nail on the head once, he's gonna hit it every single time. And it's like, well, you don't quite understand what a trader is, do you? I mean, we'll take 1 million trades. One of those will hit and make us look good, but the other, oof.
And when you look at his trade, we have to do a breakdown on Michael Burry, because when you look at his trade and you look at the way that he managed his trade, you could very easily say that he did not manage his trade the way you would expect a experienced trader to manage their trade. He was down significantly month over month for over 9 months until his trade started going his way. Not when he was positive. His trade started going his way 9 months in, and it was going his way to the tune of hundreds of millions of dollars being lost. He was in the middle of dozens of lawsuits when he ended up closing that trade because he locked down his investors' money and refused to allow them to take it out of his hedge fund. So there's beautiful, the movies do a really great job of showing how determined he was. But there's another side of it that I'd love to show people too.
There's always another side, isn't that the beauty of life? There's always another side.
Always another side, my friend.
Fantastic. Well, look, don't let me take up any more of your time. If you want to fire away with some of this content you've prepared for the great TradeDelicious community, Aaron, we've just launched a little giveaway on our Twitter right now, which I've been telling everyone about. We're giving away 2 evaluation accounts for the 5%ers. So people can go get free evaluation accounts to trade FX or indices. So guys, if you're interested in getting 2 free accounts, or well, 1 free account, there's a low chance you're going to win both, right? But
Right.
let's go. If you want to get your hands on one of those accounts, head over to our Twitter at TradeDmedia and you'll see the instructions there. Aaron, take it away.
Beautiful. Good luck, guys. So wonderful. I'm very excited to show you guys this data and hopefully teach you a thing or two about what we're looking at in our current situation. What are the new residential home sales? It's just a measurement of the sale of newly built homes. This sale is defined as a sale of the new house which occurs with the signing of a sales contract or the acceptance of a deposit. So basically, this just means that someone, an individual, a family, whoever, has sat down and they've signed a sales contract for a new home. That home could be at any stage of construction. So it could be a hole in the ground. It could just be ground. It could be a bunch of trees, not a house yet. Keep that in mind because this is an indicator that's leading some economic data and differs from something like the existing home sales, which we'll get into a little bit later. This data is provided by the U.S. Census Bureau out here. So when you're looking, forgive me. So when you're looking at new home sales, right? The big picture is super important. We talked a little bit about Michael Burry just now, where Michael Burry was looking at a ton of economic data in order to short the housing market. He wasn't looking at one piece of the puzzle or another. He was really looking at everything that you see here. So the existing home sale data is released within days of another event in existing home sales and new home sales. Existing home sales includes existing homes and is measured slightly differently. With existing sales, the majority of transactions reported are reported when the sales contract is closed. That means almost everything is done. Everybody has dotted their I's and crossed their T's. Whereas for new home sales, there could just be a hole in the ground. You could be 9 months from having a new house. So the new home sales indicator is more of a leading indicator as opposed to the existing home sales being a lagging indicator. As always, context is king here, right? So the health of the housing market is depend on a variety of different events that you see here. This is just a collection of a few that characters like Michael Burry would have been looking at back in 2008 to determine whether or not there is a housing crash. So keep that in mind whenever you're looking at any of these housing data. The headline data here is really just the amount of new homes that are sold, and it's seasonally adjusted. So what we're looking at is 683,000 sold for our last new residential sales report. What we're looking at today is slightly higher. But this is a really good example of how a headline figure just shows you one number, but there are additional details that you can look at, right? So the U.S. Census Bureau does a really good job of showing us this change over time as to how many new home sales we've seen month over month over time using this chart. They also show the amount of new home for sales and the median sales price. But when you're looking at the event and you look at the number that's expected, everything is just based on the amount of new homes that are being sold. The next release comes out today, so please be careful. This is something that could move markets. If it's a really big miss, if it's a really big beat, if it's not, then it really won't move markets in too many ways. This isn't the focus. Everything is inflationary based, as we've been discussing. But this is really important, guys. This type of information is incredibly important for the health of the economy as a whole. Now, this is a really weird situation. Part of the reason why I want to talk about it is, we've seen a lot of recessionary pressures. The markets have really been struggling outside of 5 or 6 stocks that we've been discussing. If you're not Apple, Microsoft, or Netflix, chances are you're down right now. And when those types of big, large cap stocks are down, although outside of the 6 that are performing well, usually you see something like new home sales fall off. We've seen the exact opposite, though. There are a variety of reasons for this, but the core of the matter and why it's important right now is we are in a questionable period. This is why some people question whether or not we're in a recession at all. We do see some new home sales get incredibly low back here in July of 2022. But look at the next month. Immediately it pops up, then it pops down. We see a little bit of what we call a consolidation. We're traders. And then it takes off. 683,000 new homes sold in last month's figure. So keep that in mind whenever you're looking at these indicators, trying to figure out where opportunities are to potentially short something. Maybe don't short the residential new homes market, right? Now, I wanted to show you guys a comparison to 2008. We've discussed 2008 a lot. It's the closest data that we have, right? And it's a very similar situation in many ways from an inflationary standpoint. Look at what happened in January of 2007 to roughly August of 2009. This chart is much clearer than this chart. Now, this is only a few months, but you can already see here things are up and down, down and up. When you're looking at these numbers, this is incredibly clear. We have 891. We never get that high again. This is January 20 of 2007. And then in August, we end at about 377,000 new home sales reported. This is a much clearer understanding of what's going on. The picture is super clear, and it would be much easier as traders to find opportunities to short different things, specifically REIT stocks or mutual funds, things of that nature that have something to do with the housing market. Right now, it's just not that clear. So keep that in mind as you're moving forward and trying to understand what's going on here. Don't be quick to say, I am Michael Burry. I can get these credit default swaps. I can hit $1 billion. And chances are it's not true, especially because the situation is just different. And again, context is king. Context is always king. Another portion of the puzzle that's important is the median sales price. New home sales usually comes out with this data as well, as I showed you guys in the headline figure. That report that comes out just below the headline figure shows you the median sales price, and it's really questionable right now. This figure is going to show you what it's been. This is 98 all the way up to August of 2009, and this is 2012 all the way up to today. This man right here, Jerome Powell, really wants these things to slow down. He's the head of the Federal Reserve. We talk about him week after week after week. He said recently in his most recent announcement that the acceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals, and that's a good thing. And he's right. In a way, we have seen median housing prices start to fall off a little bit, but it really is just a little bit. You see that small dip there? It's really not very convincing. We still jumped from $450,000 from 207 over the course of 15 years. That's still incredibly aggressive in terms of the speed at which housing has been costing U.S. citizens. And this isn't just true of the U.S. This is true around the globe. It's part of the reason why we've seen so many inflationary pressures. So as things begin to cool, we want that median number to fall, and we want rents to fall. As to whether or not they will, it's very hard to say. As I said before, the new home sales figures have been inconsistent, but they have been growing a bit over time, as opposed to the 2008 figures, which were clearly falling off. When things are clearly falling off like that, it's easier to control the price because obviously there appeared to have been less demand, more supply. Things were falling off in the existing home sales space, and it was very similar in new home sales. However, less demand automatically means less supply because less people are signing sales contracts, less homes are being built, less building materials are being purchased, so the prices of things are falling and falling considerably. I'll do a full breakdown of how our current recessionary period or how our current era is different from 2008 and how this isn't like exactly what was happening with Bear Stearns, although we have a very similar situation with our banking system showing repeated failures. I still want to talk a little bit about that, but for now, this is all that I have for you guys today. As always, thank you so much for your patience, and I appreciate you guys sitting with me through a variety of these wild.
Aaron, absolutely fantastic. I'm going to bring you back on the screen in a second, but you wouldn't believe what you look like right now. So I'm going to see if I can fix it. Just to give everyone reference, this is what Aaron's camera is looking like right now. So just give me a second. There we go. Look at that. You're back. Yeah, for some reason our system glitches. Like you can't share your screen and be on camera at the same time. I don't know. We'll fix that in the post.
Oh, okay.
Analysis, but no, that was fantastic. Thank you. I'm so glad you were able to bring the energy today, because I tried my hardest, and apologies if I coughed in a mic at some point throughout that presentation, but I am just fighting the demons over there. But no, that was really good, and it's really good to see, because these are things we experience day in, right? Regardless whether you're a trader or not, this is something everyday people feel. Housing prices, especially the younger generation, struggling to get on the market, and then can't afford to get on the market because interest rates are going through the roof, right? We can't get mortgages. So then they go over to rental market, which is just as inflated. And it's a serious issue, which a lot of people are facing, as you mentioned, around the world. So it is good to get a clear understanding, not only how we can understand this better from an investing standpoint, but what this truly means when we see this data. And that's the beauty of it. I mean, we look at numbers all the time, but the reality is there's stuff behind these numbers. There's stuff behind these numbers that affect everyday people, and it's just great to get a better understanding.
Right, and it's really valuable for us as traders, and like you said, really as people out here in the U.S. We've seen rents double and triple over the portion of over the last couple of years in the pandemic and such, and it's been really difficult for a lot of people. And as traders, it's incredibly valuable because this can show different areas of opportunity, and this macroeconomic situation can, for example, affect the strength of a currency. But it's also important to keep the human side in mind. A lot of people are going to be affected by this. I'm sure people in our chat are affected by this. And so it's great to have a general understanding of what's going on, and also have the opportunity to dive deeper into these materials if you want to find some more opportunity or find some slither of hope, some kind of silver lining in the clouds, right? As we go through this crazy situation of roller coaster interest rates and prices skyrocketing. It's been something.
What do you reckon's next? I mean, well, so we had the COVID-19 pandemic, right? That was the talk. That was the financial review. Look at that. Okay, and now it's interest rates and unemployment. That's the talk. Everyone look at that. Housing. Wonder what? There's always something, right? There's always something people are complaining about, or there's something going wrong that we need to fix, right? I wonder. I love the future. I wonder what's going to happen next.
Me too. There's so much that can happen, and it's so hard to determine because these things that we've seen over the past couple of years all started with an epidemic we would have never been able to guess. The last epidemic we saw, like coronavirus, was the Spanish flu.
Yeah.
A horse and carriage was still a popular mode of transportation at that time. It's a very different, crazy situation. I do think part of it is going to be inevitably very well trenched within what we've seen within the financial markets. The fact that JP Morgan Chase here in the US now has control over 10% of the deposits. That means that JP Morgan Chase, when someone deposits, an individual or a corporation deposits with the bank, over 10% of that number, over 10% of that money now sits at one bank here in the US. The fact that we've seen something like that, I mean, that's not a great sign, right? So I do believe that could be, the banking space could be a big part of the next thing, as it has been over the past couple of months here in the States. But it's hard to say. I could say that, but a lot of people thought that gold was going to fall off the face of the earth once we recovered after the 2008, 2009 crisis. It didn't. We're still hitting all-time highs as we speak. A lot of people thought that the NASDAQ would be in the toilet come May of 2023, right? And it's carrying the whole market. As of yesterday, it's up 23% year to date. And so, this is why we always talk about analysts can just say things, and they could just come out with their ideas and their opinions because it's their jobs. It's our job as traders to really just look at the data we have available to us and make the best choice we can to hopefully grow our accounts day after day.
Yeah, couldn't said it better myself. Guys, almost every single person in this live stream has liked the video. Like, I kid you not, we are almost equal with likes and concurrent views. The love is truly felt on this end, guys. Thank you so much for everyone that has. Very exciting, because coming up next, we have an interview with a 78-year young, he told me off because I called him old, okay? 78-year young day trader trading out of the fivers. So guys, stick around for literally 2 minutes. You're going to be redirected to this video where you'll meet David Brewer and his remarkable story. Aaron, thank you very much, and we'll see you tomorrow.
Thank you, guys. I'll see you.
What is it that you have that is going to give you an edge over them? Now, that's hard to develop, and it takes time to understand. But that's why I want to challenge you. Instead of just going, yes, I'm going to trade, I'm going to learn to trade, here's my money, let's click a load of buttons, do some research. You've got to be at the top of your game to keep performing.
So I think I'm going to sell the bike. I'm going to take that money and put it in a margin call, and then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like,